All right, good morning. Today is March 27th, 2024, and I'm back with another edition of the Wednesday live show. And it is a holiday shortened trading week. So, markets closed on Friday for Good Friday, and that always adds a little bit into the mix. The past couple of days were pretty dull intraday as far as the price action, and of course we'll take a look at the charts here in a second. But generally speaking generally speaking holiday shortened weeks, the days leading up to the holiday, especially if it's on a Friday, whenever the market's closed on Friday, the price action tends to be a little bit dull. And so anyway, yesterday was very strange. Actually, the past couple of days have been sort of strange. We've had like the market just kind of moving in slow motion, the volume and participation, overall seemingly low, and then all of a sudden, towards the end of the day, we're getting like these little sell-offs, right? And interestingly enough, this morning the market, kind of opened and opened higher, bounced around a little bit, and as we speak, it's selling off a little bit. But let's go to the chart here. Interestingly enough, this trend line that I drew recently, a while back actually, but you can see the three perfect touches. I mean, just a really persistent, beautiful sort of uptrend. But as I've been mentioning and talked about last week, this is a very steep uptrend. If I zoomed this chart out more, the perspective would change. And so, you go to a weekly chart and zoom out for a while, which we'll look at in a second here, but it's an extremely steep incline, right? I mean, this is a very steep incline. Three really nice touches on the S&P here. The SPY, the trend line doesn't fit quite as well, but we had sort of a flat top breakout up here, right? So the market spent, basically a couple of weeks sort of consolidating here, and then it broke out, and then interestingly enough, like this little gap up here, this little gap up right here was kind of the last hurrah, and we've been kind of fading back down ever since. And so this trend line to me is sort of the big kahuna, right? Because it's been going literally since, the last October when the market bottomed out. And so, it's been just extremely persistent, and the sentiment, I believe, it seems to me that the market sentiment is sort of, in a spot where, and this is true with me personally, once you get a trend like this where the market just seemingly goes up no matter what gets thrown at it, after a while, everything's a function of price and time, right? And most people don't realize that. They just focus strictly on price. But the longer that, you get a rally like this and a persistent uptrend, the more that the participants are subconsciously become acclimated to the idea that, well, nothing can stop this rally. The market always goes up and that type of thing. And so quite frankly, let me save. I gotta save my little. Every time I move something on this chart, I gotta save it. Anyway, there's an inflection point coming up here, as you can see. And actually, what I should be doing right here, what I want to do is extend. I need to extend this out just a little bit here. So, because as you can see, and I talked about this last week, there's certain trend lines. The steeper the trend line, the more likely it can get broken just by virtue of the market moving sideways, right? So we have exactly that sort of situation right here. If the market continues to move sideways, it's going to break that trend line. And since that trend line is so persistent, I believe that that's going to be the first sign of some sort of a correction or a pullback or whatever, or the other possibility, obviously, is that there's only there's today and tomorrow, right? Today and tomorrow. So I mean, it could touch that trend line and bounce off of it, and the next move could be a continuation of it. So you never know what's going to happen, but that's what technical analysis is. Just kind of gives you perspective, right? So here's the 50-day moving average. That's just a perspective. The market tends to like to respect certain moving averages. It's interesting how it's just basically following along with the trend, and it's been a long time since back here when basically at the beginning of this trend the market hadn't even come close to the 50-day. So there's tons and tons and tons of support below, and we're in kind of an environment now where it's hard to imagine what can derail this. And from a macro perspective, it's kind of funny because the idea is, and I discuss this almost on a weekly basis on this show, is that last year, like 6 or 7 rate cuts were priced in, and going back to the Fed rate hike cycle in an effort to tame the inflation they let get out of control. Everybody's all excited about the Fed cutting interest rates, right? As though that's going to be, that's what the market is sort of anticipating. It seems like because last year, I mean, several times, they talked about on CNBC, which I very rarely listen to anymore. I actually have CNBC on, but I only listen to certain certain segments. Most of the time, it's on mute. But back to what I was talking about, the incessant interviews with people last year about when is the Fed going to pivot, the pivot, when are they going to start lowering rates, all that. And it seems like a lot of last year's, up cycles occurred based on the idea that the Fed's going to lower interest rates. And then, of course, there's the idea that typically when the Fed starts lowering rate, when they start cutting rates, it's because the economy is weakening, right? And so there's every possibility when the Fed does start, cutting rates, when they start lowering rates, it's going to have a negative effect on the market. So it's kind of ironic. I mean, the market's been rallying based on the idea that the Fed's going to lower rates, and then there's a very good chance when they do start lowering rates that the market is gonna take a winger. So it's just amazing to me. It's amazing to me that this, and like I said, this reminds me of 2017. The volatility is extremely subdued. I'm not sure if we've had, in 2017, I think that there was one pullback that was like around 3% or something, and I haven't done the math or seen this, but I'm not sure that we've had a 3%, dip yet this year. It kind of doesn't look like it. So, I mean, we certainly haven't had there's a dip, and then there's, a sell-off, there's a correction, there's all the different terminology, but we haven't had a if we've had a dip, we haven't had a pullback. That's the one I was looking for. 5% is a pullback, 10% is a correction. So between 5 and 10%, but we haven't seen that yet this year. So, and I would think that in any given year, at least from my experience, in any given year, you typically have a correction. But I was blown away by, like I say, 2017. So I don't know if that I have that on my charts. Let's see if no, even my this is sort of my go-to longer term chart here, and the reason is that it goes all the way back to just prior to the pandemic sell-off, right? We've had some pretty persistent, obviously 2021 was an extremely persistent uptrend. Um, if you look at the weekly candles, I mean, even going back to just 2021, and look at the weekly candles this year so far, you can see that the ranges have kind of tightened up, right? It's almost like it's more controlled than anything. And I know that there's different opinions on whether the market is somehow controlled or manipulated or whatever, but it seems really odd to me that that with everything going on in the world, right? Everything, all the craziness that we've seen, and I mean, even in the past couple of years, that the market could just be so well behaved like that. It's strange. It's kind of like an anomaly, but hey, you never know. And the other thing is like the rotations, right? The rotations in the market are kind of unusual. So of course, like let's look at Nvidia here, because Nvidia is there we go. Look at this on the daily chart. We're starting to get a little bit of there was that big outside reversal bar, and then they ran it up again, and now it's made a slightly lower high. And of course, this is the big deal here. The funny thing is that it used to be Apple, Apple, Apple. That's all they talked about, and Apple was the bellwether for the whole market. And that's kind of what I was leading up to is, and I discussed this last week. I mean, the Apple's chart looks pretty darn rough, and they were actually. I actually listened to a few minutes of CNBC this morning. Heard Kramer, mention. I think they said that Apple's sales were down 11% or whatever, but this is not a real pretty chart here. It's down fairly significantly off the highs. It's got one of these kind of, head and shoulders looking topping patterns. It's definitely I would say in a downtrend, right? I mean, a trend line, you draw a trend line sort of across the highs, and it's in a near term, I would say, downtrend, right? Simple as that. And then of course, you got this, and the point here is that I guess I should save that, right? Oh, see, this is so annoying. See, I already have Apple in my watch list, and so now I've just saved it again just because I drew a couple lines on the chart. Look at this. You got a 50-day crossing down through the 200-day. There's a little potential W pattern here. I mean, it wouldn't surprise me. You can see this little consolidation we've had here over the past few days after sort of a sell down. So yeah, it wouldn't surprise me to see this thing maybe, attempt to rally. But at the same time, if you didn't know what this was, if this was just some random chart, you had no idea what it was, you'd look at it and you'd say, well, that's not extremely constructive technically if it breaks down below here. So, there's some support at these two levels, but what's most interesting and where this discussion was originally headed was the fact that Apple being so weak and down off the highs and looking so bad technically, you would never think in a million years, at least you wouldn't have last year, that the market itself would be up at the all-time highs. But you've got back to Nvidia, you've got certain stocks that have kind of picked up the slack, right, so to speak. And of course, the rest of the Magnificent Seven, as they say, has kind of made up for it, I guess, is all I can think of, because very, very strange. So there's Facebook, right? And let's look at Microsoft. I mean, in the big scheme of things, Microsoft probably, one of the most important companies in the world. So, and always has been ever since I got my first computer. Microsoft's always been the important one, more so than Apple. Quite frankly, I've never actually owned a Mac, even though I have an iPhone and an iPad. I've never owned a Mac computer. Microsoft looking pretty good here. Um, Beautiful chart. Just recently up at the highs. You can see it's having a little bit of a dip here at this point. So as far as valuation goes, geez, I don't know. I mean, I saw something the other day about some company that has a PE ratio that's, astronomical, and I wondered to myself, are PE ratios still relevant in this sort of market? So I don't know. Microsoft and Google. I'll tell you something interesting. I used to kind of consider Microsoft and Apple and Google and that all to be adversaries, but I got to tell you, it's a strange world out there, right? So I use my Edge browser for certain things, and I noticed that there's Google ads all over Microsoft stuff, which is which seems kind of weird because originally Microsoft's Bing was, direct competitor to Google's search engine and all that, and they each have their own, they're each developing their own AI and stuff, but but I wonder if other people notice that same sort of weird stuff. It just seems weird to me that, that when I'm doing stuff that I clearly know that, Microsoft is steering me towards, searching with Bing and going to different things or whatever. I mean, they have like a points system now where you get points and rewards and all this kind of stuff for using their browser and search engine. And they've always obviously encouraged that, right? And so it kind of mystifies me that when I do that, I'm looking at Google ads. So they definitely have some sort of a partnership as far as that goes. And then of course, you throw Apple into the mix, and there's a lot going on behind the scenes. Anyway, my point here is that some of these other stocks, Microsoft, Meta, Google, look at Google, nice pullback all the way to the 200-day moving average, and then a move off of it and back to the highs. And so some of these other stocks are the reason that the market's up at the all-time highs, because these mega cap stocks, of course the S&P is market cap weighted, and that means everything, right? And that's, I mean, to design an index that's market cap weighted is almost as insidious as the Dow being price weighted, right? Crazy. I mean, it's crazy when you think about it, because it's brilliant. Because if you design an index that's either price weighted or market cap weighted, and the market cap weighting makes way more sense, right? Because the actual price of a stock is arbitrary. Speaking of which, Chipotle, right? I mean, this thing always blew my mind. Chipotle. They've announced a stock split, and so I believe when they did, that sent the thing skyrocketing like that. But yeah, so I mean, if Chipotle was in the Dow, it would be if Chipotle was in the Dow right now, it would be the number one Dow stock. Whatever Chipotle Mexican Grill did, fast food chain, that would be the Dow. And so that's why price weighting is kind of doesn't make as much sense as market cap weighting. So there's a lot of other weird stuff that goes on behind the scenes. I read, there's all Boeing obviously is in the news almost on a daily basis, and this week I happened to stumble across an item that said, something to the effect of, how many billions of dollars of stock that Boeing has bought back in the past, X amount of years. And so, that kind of, the whole stock buyback thing's always kind of rubbed me the wrong way just a little bit. I mean, it makes sense to certain degrees, but in the past, and see, we're in a whole nother cycle here, and I'm gonna guess that a certain percentage of the participants, such as myself, have been in this market for ages and ages and ages, and they remember all this stuff. But a significant portion, maybe a majority of, current participants in the market, they don't remember things like I do from back in the day. And so when I see history repeating itself, it sort of, it strikes me. And my point here is this. Way, 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 way back in the dot com, after the dot com days or whatever, but um, I believe it was Dell Computer. There was a big article about this, maybe 10 years ago or something. But Dell Computer bought back. They bought back their, so much of their stock. But at one point, when the market was, in a bear market, the market cap of Dell was considerably less than they had spent buying back their own shares, right? So I don't know that I articulated that in the way that I meant to, but I mean, here's the thing: if Boeing spent X billion dollars buying back their shares, and now they're like borrowing money and in different things, and and so the point of it is that in a downturn, it's possible that share buybacks were a complete waste of money. And of course, there's the argument that share buybacks are better than dividends, because what they do is share buybacks. They basically create demand for the stock, which inevitably makes it go up because the institutions are in there buying back shares all the time for these companies. But in the bigger scheme of things and in the long run, share buybacks are, well, they used to be illegal, right? And then that changed, and so that's a whole nother dynamic to it, along with the idea of these the zero days to expiration options. That's another thing that we've discussed here on the show. That's kind of I'm not going to say wrecked the market dynamics, but it's certainly changed the market dynamics. And whether that's for the better, I don't know. So let's take a quick look around at just some of the stuff here. There's a weekly chart of the semiconductors, very reminiscent of a bull market and or the dot-com days. See, for a long time now, there's always something that reminds me of, the dot-com bubble, right? And we've talked about this quite a bit. A lot of stocks already had their little personal dot-com bubbles and busts and that, but so many things, like I think it was Reddit going public, is a sign. Semiconductors, being parabolic here reminds me of the late 90s with the Qs, right? So there's your Qs right there. Technically speaking, and I talked about this a lot, over the past couple of years, the whole cup and handle concept, and quite frankly, surprisingly enough, the cup and handle manifested itself in basically a textbook fashion, despite the idea, despite everything that got thrown at the market. And so sometimes, it's like a left brain, right brain thing. Sometimes you think, well, based on the macro environment, based on everything going on in the world, based on the chaos, the uncertainty, excuse me, inflation, interest rates, just all that stuff. Choking on my coffee here. It's hard to imagine that the market is just gonna literally just shrug everything off, everything that gets thrown at it. But as we've looked at these charts over the past couple of years, on a weekly basis, and I've talked about the cup and handle, and I always talk about, just going by the chart being completely objective, it looks like, this or that, as opposed to what you may think. And so that's basically, that's what technical analysis is about. That's what you got to do, right? The funny thing is, no matter what I think, the market itself, and this holds true for anything, no matter what you think, the market is going to typically, do its own thing, right? So here we go. This is what I was looking for. I was looking for this ARC weekly chart because it's interesting. A couple weeks ago, I drew this little consolidation on here, and here we are, moving sideways out of it. So now the trick is to extend this out into time a little bit here and still maintain, still sort of, there we go. I guess that's close enough for now. So, and then of course I got to save it and all this rigmarole. But zoom out a little bit further here. So, this move here from, you know, I guess this is the post-pandemic parabolic move, and then of course this is the boom and bust of, reminiscent of the dot-com days that I was talking about. And the big question here is, and of course I know that the companies kind of get moved around and weighted and all this stuff. But the question is something like this going to reemerge and rally back? So I mean, could this thing go from 50 to 100? Well, that remains to be seen. And technically speaking, I mean, it's a pretty nice bottoming pattern. It looks pretty darn good, and if it starts to emerge out of the top of this, there's every possibility that, like I was saying before, back when we didn't think there was any reason in the world why the market should, continue to go up or turn into a big giant cup and handle and hit new highs, it did. And so looking at this objectively, I have to think of the same thing. When I see a long-term bottoming pattern like this, it interests me, even though with the actual markets at all-time highs, it's hard for me to envision that, that what seems more likely is that the market itself is due for a correction, and this could potentially go back and retest these lows. I mean, look at the years. I mean, we're looking at years here, and so nothing is literally happening this year with ARK. So, and some of the stocks, I don't know if Zoom is still like, one of their top holdings, but this is, like I was saying before, we were talking about, those of us that have been around through many, many cycles. Interestingly enough, there's a certain pattern to like an actual, bubble that bursts. And if you look at this chart and you look at the South Seas bubble of 1780 whatever, it looks very similar. It looks similar to the tulip bulb chart. And so, basically an asset goes absolutely parabolic, and then it has its first sell-off and a bounce, and then it kind of looks like this. It would probably match up closer on a monthly chart, but then eventually they do this, right? Eventually they just sort of bomb out and go sideways and go flat as compared. And of course, it's all perspective. If I zoom out on this chart, and so my point here is, if for some reason this thing, bottoms out and starts turning back up, then, there's a lot of potential here, put it that way. So, I mean, the thing was almost $600 and now it's 60, but the other thing is that, you can't just say, well, this looks like a great bottoming pattern, it's going to turn up, whatever. You have to wait. For it to, to show you that it's doing something, right? So, I was actually kind of going down my watch list. Interestingly enough, when this ARM Holdings went public, of course, they went they went public, and something tells me they used to be public a long time ago. But anyway, um, semiconductors are all the rage. The semiconductors are hot, right? It's one of the hot sectors and has been, obviously. We're talking about Nvidia, and of course, we could look at AMD, but this was something that kind of felt like it was going to be a winner. And then I forget what this news was. This may have been earnings or something, but sometimes the market throws you something like that really makes sense, right? Like you get a certain IPO in a really hot sector. AMD's kind of interesting here because, well, for one thing, whenever you see an outside reversal bar like that, it's 9 times out of 10, it's a sign that you're going to get a little bit of a pullback. And so, we've seen some similar outside reversal on some other stocks, and then sometimes you do get a little bit of downside, and then you kind of retest it. But chances are that the high of a bar like that is going to stick. So, and of course, I was actually this morning I was thinking about getting into a discussion about candlesticks versus bar charts, to be honest with you, and why I prefer these open high low close bars to candlesticks. But I don't have time to get into that now. Anyway, we looked at all the major indexes, and interestingly enough, we're looking at the third down week in a row on the Qs, even though it's not much of a down week. But S&P, of course, is gonna get interesting starting in April. And the funny thing is, when the calendar changes over, right? So you got to think of it this way. The end of the first quarter is, basically tomorrow, right? So we got end of quarter stuff coming up, and there's always rebalancing and profit taking and new positions and all that kind of stuff. And so, who knows? But this weekly chart, it's interesting to see the Qs with a few sort of down weeks. But I mean, here we are Wednesday. Look at this weekly range on the S&P, right? And this goes back to what I was saying before about how yesterday, Monday and Tuesday, the market just kind of seemed like it was trading sideways and nothing was happening, and the volume was really dull. So I mean, there's always action, obviously, in individual stocks and that, but this kind of unusual to see. This is the smallest weekly range. Now here's another small weekly range, but this was the holidays, right? This was like the week of, between Christmas and New Year. To see a weekly range this small, um, I mean, you got to go back to, and even it looks like the beginning of April here last year. Looks like the first week of April was like a little tiny dull range, and so we saw a couple of them there. But this has got to be smaller range than even the week between Christmas and New Year. So that's kind of weird. But of course, there is today and tomorrow. But I'm not sure what that's telling me, right? Does that mean that the market's reached a permanently high plateau? I don't know. It's very, very odd, but it's going to be interesting to see what the weekly bar or candle or whatever. So if this was a candlestick, this would just be like a little tiny doji, and which obviously, this signals indecision. And as we speak right now, the open and close look very, very almost identical, and so that's kind of interesting. But anyway, so it just basically tells you, hey, we're in low participation, kind of, I guess, pre-holiday mode or whatever, and so end of quarter. But for it to be so perfectly balanced in such a tight range after this move just seems like an anomaly to me, and I'm not sure what to make of it. So anyway, I guess we'll wait and see. So everybody have a good long holiday weekend and a good Easter and all that good stuff, and I'll see you back here next week.